The latest volatile data from the ABS was released today. As I've explained before, along with many other countries, Australian employment data is very noisy, and after last month's unexpected rise, which got people betting on rate cuts, unemployment declined in October, and the economy added more jobs than anticipated. This confirmed that the labour market remains tight and validates the Reserve Bank's decision to leave interest rates unchanged. Stocks and bonds, though, slumped as a result. The season-adjusted unemployment rate fell to 4.3% in October after rising to 4.5% in September. The October unemployment rate is in line with the June, July and August 2025 figures. The number of unemployed people fell by 17,000 this month, while the number of employed people rose by 42,000. The ABS said this month more unemployed people moved into employment compared to a typical October. Full-time employment rose by 55,000. The number of females in full-time employment rose by 29,000, while the number of males rose by 26,000. Rising full-time employment contrasted with a fall in part-time employment of 13,000 people. The fall in part-time employment was driven by the female workforce, with female part-time employment falling by 21,000 people. Males partly offset this with an 8,000-person rise in part-time employment. The participation rate remained steady at 67% in October, and male participation rose 0.2 percentage points to 71%, while female participation fell 0.2 percentage points to 63.1%. The employment to population ratio remained at 64%. Hours worked rose by 0.5% in October, higher than the 0.3% rise in employment. The underemployment rate fell by 0.2 percentage points to 5.7% in October. That was 0.5 percentage points lower than October 2024 and 3 percentage points lower than March 2020. The underutilization rate, which combines the unemployment and underemployment rate, fell by 0.3 percentage points to 10%. That was 0.3 percentage points lower than October 24 and 3.9% lower than March 2020. The Australian dollar and policy-sensitive 3-year government bond yields jumped after the release, while stocks slid the most since September. One other factor to note is that the ABS data released yesterday showed strong rises in the number of international border crossings. That's border crossings rather than the number of people themselves. Now, whilst this does not directly translate into the migration count, as the ABS is very, very keen to point out, it does underscore rising numbers of workers arriving. As a result, we need to see somewhere around 30,000 new jobs created each month and every month to keep the unemployment rate steady. That will be no mean feat. But more broadly, any hopes of more rate cuts continue to evaporate. So those banking on deep cuts from here will be very sorely disappointed.